web lecture on standards on auditing. So today's speaker is CA Jomon K. George sir, who doesn't need any introduction as such. But anyway, I'll formally introduce him once we conclude with our Institute motto song. We'll start this program with our Institute motto song. Ramesh, please for the Institute motto song. You need not stand, just keep your hand at your heart as a matter of respect.
येष सुप्तेषु जागृति येष सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Thank you, one and all. As I already told, we don't need any introduction for Jomon K. George sir, but let me introduce him formally. He's a fellow member of the Institute with 31 years of diversified practice experience, chairman of SARC for the year 1920, founder and managing partner of JVR and Associates, an 8-partner firm specializing in corporate audits and consultancy, faculty for auditing at the Institute of Chartered Accountants of India and taught more than 10,000 students, regular resource person on professional circuit on accounting and auditing standards and corporate audit and so on. He has done more than 900 presentations, also a peer-reviewed trainer, was a member of Auditing and Assurance Standard Board of ICAI, and is also a chairman for Ernakulam branch in the year 2002 and 3. He traveled extensively in UK, Middle East, and the Far East, and shared his knowledge over all those places. And is a past president of Rotary Cochin Central and member of various social clubs. He is honorarium treasurer for Sports Regional Sports Center Cochin. He is secretary for Kerala Management Association for the year 21-22, and he is a member for advisory board at Saint Teresa's College, Ernakulam, and authored a book, Trials, Reflects of a Personal and Professional Life, which was released in February 2021. So with this short and sweet introduction, I left to the floor to Jomon K. George sir. Sir, you can, the pitch is ready for you. You can dive in and play your match.
Thank you so much. Good evening to all of you. Almost 75 plus participants and still ticking. Extremely happy to be here with you, though online. Chairman of the branch, very dear friend, Devi Kishore, who is on election code of conduct. And another very dear friend, Jayant, the secretary of the branch, who is now coordinating the meeting. And as I mentioned earlier, GSR, Chairman Emeritus and CP in charge, who is instrumental in me having you with this evening. Respected senior members, illustrious past chairman of the very, very vibrant Vijayawada branch, and fellow members, extremely happy and delighted to be with you on this very, very important topic. And offline, we were discussing, chatting with Jayant, that this off-season is the right time to learn. We are less busy in our office, and it's a time to unlearn certain things and learn new. And the organizers, though they won't tell you, are under pressure by the Central Council and the various committees to conduct mandatory programs for standards in auditing and code of ethics. Not without reason, as all of you know, that peer review is now getting expanded, going to touch and cover most of us, almost every one of us. and of course, the new code of ethics in the wake of a lot of the recent developments. One has to be extremely careful in chartered accountants in practice, particularly practicing professions. They call professional accountants as the term they use in the code of ethics. We have to be aware of all the pronouncements of the institute and make sure that we comply with those standards, those pronouncements, accounting standards in the preparation of financial statements, standards in auditing or auditing standards, as they're popularly called, in the discharge of audits, or technically speaking, in the discharge of attestation functions. So that is the way we are approaching this topic today. And thanking the organizers once again, let me move on to the specifics of the topic and try to share my slide with you. Jayan, is it visible now? Jayan, can you see the slide?
Yes,
Yes, sir.
sir.
Yes, sir.
We are able to
Go ahead,
see,
please
and
go
the
ahead.
voice is also clear. Please carry
Voice
on,
also.
sir.
I'm audible and the slide is visible. Great, great.
Yes, yes,
Good way
sir.
to go.
Yes.
Good way to go. Yeah, nice. Okay. One sec. Let me just reposition this. Yeah. So standards in auditing, whenever we discuss, and I've captioned it slightly, expanded the caption as, are we doing it right? Are we doing it properly? Keeping in mind, or in the wake of peer review, bank audits, and tax audits, a lot of things which we have to discuss. So whenever we discuss standards in auditing, there is a feeling that this is only for large companies, corporations like Reliance or Infosys, and those professional accountants sitting in Mumbai, Delhi, or metro cities. But of late, in all my presentations on standards and auditing, this is a wrong way of looking at it. This is a wrongly conceived thinking altogether. So therefore, I would put the next slide this way, that the applicability of standards and auditing is wherever there is expression of opinion, standards and auditing would apply. This is with the same force as it applied to a large corporate. So let us discuss the tax audits that we do, or we just concluded. Non-corporate tax audits, the tax audit report is given in form 3CB. In 3CB, there's expression of opinion. Expression of opinion would mean we are saying that, or we are reporting that the financial statements give a true and fair view. That's something which is referred to as an opinion. So in form 3CB, we are giving an opinion. In the bank branch audits that we do, and last year, I think for many of us in Kerala particularly, after a long period of cooling, and somebody said it is not cooling, it's almost frozen. 5-6 years there were no audits, but we have bank audits being re-allotted, SBI and all that. So in the case of small branch audit also, we are expressing our opinion. Therefore, standards in auditing would squarely apply. All the standards in auditing would squarely apply as much as, with the same force, as much as it would apply to a large corporate or any large publicly limited company, listed company, and so on. So it is not just for corporate audits. It's not just for large corporates. It is not for the suit and boot army. It's for every one of us, whether we sit in Vijayawada, Guntur, or Cochin, or Calicut, wherever. Standards auditing have got that kind of a universal applicability. That is the thinking and the understanding which we should have. And look at the peer review deadlines. The last, if you see, firms conducting branch audit to public sector banks and firms having 3 or more partners rendering assurance services. So in which case, it's or actually, not and or. So if you are a firm of 3 or partners having more than 3 partners, or if you're having a branch bank audit, then you have to complete the peer review done by 1/4/2025. So we are just 5 months away, or less than 5 months away from that deadline. And if we are in that slot, it is not that the peer review board will come to us. We have to apply to peer review board and get the peer review done. So this is why I'm talking peer review is one of the very important considerations in peer review. And one of the important, I would say, that requirements for passing peer review is that we comply with the applicable standards in auditing. Applicable standards in auditing mean all the standards in auditing are applicable. So that's something which one has to be really, really aware of. So that is why I've shown this. I will surely share this slide deck with Jayant and Ravi Kishore, which can be shared with the members. And you can have this. But if some of you are jotting down the points, it would be very good for registering. And then, it settles in the memory faster. So this is how it is. And with that, let us dwell into the history and evolution of standards and auditing. As some of the seniors would know, that the Auditing Practices Committee, as it was called then, it was set up in 1982. Institute was set up in 1949. Accounting Standards Board was set up in 1977. So 5 years later, they said, okay, we should also have a uniform theory, a uniform code of literature for the discharge of audits. Therefore, they issued 1982 to set up the APC and issued what is known as Statement on Standard Auditing Practices, abbreviated as SAPs. And this board was renamed in 2002, but in line with the international name, International Auditing and Assurance Standards Board of the IFAC. So 2002, and then they started issuing AIS, Auditing and Assurance Standards. I was fortunate to be a member of the Auditing and Assurance Standards Board, co-opted member in 2005. I'm sure some of you remember that Manoharan sir, T.N. Manoharan was the vice president of ICA, and he co-opted me to the board and had a great learning experience. And I feel that I could contribute as well. So it was renamed as AISB. And in 2008, taking into account the developments in the field of auditing and auditing literature across the globe, there was a relook at the whole thing, and the new preface was issued in 2008. With that, today we have a new classification. We have two sets of standards, SQCs, they are called Standards on Quality Control, and Engagement Standards. And engagement standards are broadly classified into Standards on Auditing, SS, Standards on Review Engagements. I'm sorry. Standards on assurance engagements and standards on related services. So these are the four categories of engagement standards. So mostly today we are going to discuss standards on auditing. Of course, we'll touch upon one important SAE, assurance engagement, and related service standard as we go by and as time permits. Now, why do we comply with standards? Why should we comply with standards? There are many reasons, many loud reasons, sound reasons for that. To expedite audits effectively in accordance with GAPs, generally accepted auditing practices. So in a disciplinary proceeding, or now, the NAFRA is a super regulator. It's flexing its muscle too much. In fact, my son who is doing his law in Kolkata National Law School, he is attending a course on capital markets and a company law related certification course. So yesterday when he called me, he was saying that one of the professors, he was saying that essentially NAFRA is exceeding its mandate, disregarding the contribution and the role played by ICA, and in formulating standards, all those things. So that is how NAFRA is flexing its muscle. So any proceeding in a disciplinary proceeding or in an attempt to disprove any charge of negligence against the auditors, it's very important that we comply with the standards auditing or generally accepted auditing practices to utilize the resources effectively. The resources that we bring into an audit would be the audit team, the time frame within which you have to complete, the expertise, the domain knowledge that we have. They have to be effectively utilized within a framework and to guide and direct supervise assistants properly. So if you have an audit program, probably, I have something to share towards the end of the presentation. Now, before that, I will do it right now. I have developed something called an audit kit. An audit kit which includes many of the requirements like letter of representation, letter of engagement, various formats, and of course, a presentation on standards and auditing, which I will share with the link. I will share with the chairman and the secretary, who in turn can share on WhatsApp with the membership at Vijayawada. So that would be useful so that every one of us do not have to reinvent the wheel. I've done some homework and you have to essentially customize. For example, this year, 23-24, there's an additional reporting requirement in the auditor's report of a corporate audit. What is that? Can somebody contribute? Unmuting. What is only additional requirement this year in 23-24 corporate audits? Are you able to hear me? Can someone respond? Fine. Let's save
Yeah, it's
time.
good, sir. Please carry on, sir.
Perfect, sir.
Yeah. I don't know whether somebody put it in the chat box. Yeah, audit trail. Yeah, audit trail. Yeah, without the name is put. Yeah, thank you for that input. That makes it little interactive. So audit trail is the only requirement, additional requirement this year, and that we under the other legal and regulatory requirements we are to report. The letter of representation, or as we call it, the management representation letter, they essentially need to make the management tell us what is that they have done on the audit trail, whether there's an audit trail, whether they have been effective throughout the year, whether they have been tampered or played around with during the year. So those are all very important things which we have to do. That's also an important standard, SA 580. We'll see as we go by. So that is very important. So to ensure quality control, QC in an audit is very important. SQC is for that. Standards on quality control is to ensure quality in every audit. I always used to say this in physical presentations, particularly when we buy. Now the Chinese models have taken over. Earlier, when we used to buy the emergency lamp, there's a round-shaped sticker behind that saying QC passed, like quality control passed. So it is produced, it has gone through the inspection line. Finally, the sticker comes as QC passed. The key question in a peer review or any audit that we do or any assignment that we do is, can we, with a lot of confidence, put a sticker of QC pass on the balance sheet that we sign? Not physical. I'm just giving a similar situation. I hope you are able to relate what I'm trying to say. So with that, it's very important that QC pass we should be able to. Therefore, quality control is very important. To disprove charges of negligence, yes. If somebody comes up, it could be a client, it could be a regulator, or filing charges of negligence against us. So we should be able to establish that we have done the audit properly. But some of the ingenuously laid down frauds, well-planned frauds went undetected. But there is always a leeway there. And therefore, we have to disprove charges of negligence and to face and pass peer review. We have discussed the importance of peer review and how it is going to cover, embrace most of us in practice. More than all this, the very important point which one has to keep in mind is the requirement of the Companies Act. Companies Act 2013 is now 11 years old. 11 years old, and most of us are still not familiar. So everyone who has at least one company audit have to be familiar, essentially familiar with two chapters. Chapter 9, which deals with accounts of companies, section 128 to 138. Audit trail is a requirement which emanates from section 128. And accounts rules, companies accounts rules. So that is where 128 to 138 is chapter 9 on accounts of companies. And most importantly, the subsequent chapter, the next chapter is chapter 10, audit and auditors, section 139 to 148. So that is audit and auditors. And in that, the most important section for you and I, every practicing chartered accountant, is section 143, which deals with powers and duties of auditors and auditing standards. In the caption of the section itself, the term auditing standards is used. Now, before the Companies Act 2013, the situation was like this. The institute as a regulator, ensuring quality of work done by its members, have been issuing standards on auditing. And institute said, hey, look here, they are mandatory standards, so do comply with these standards. Otherwise, we will take action against you. We meaning the Institute of Chartered Accountants of India. If there's a disciplinary issue, we will take action against you. Now the scenario has changed, completely changed. With 143.9 saying that every auditor, not every company, not every managing director, not every board of directors, every auditor shall comply with auditing standard. One single line was a very demanding, challenging line for the entire profession of practicing chartered accountants while discharging the attestation function of private, public, any type of companies. And today, as you know, in the larger case of large companies or which are non-small companies, CARO is applicable. And CARO, there are very onerous reporting responsibility. We have had sessions on CARO. I think sometimes it is time to revisit CARO also. So this is a very, very demanding line. With this, what happens is the MCA has got the one is that our auditing standards have gained statutory teeth, statutory power under the Companies Act. And on the other side, the MCA, the Ministry of Corporate Affairs, who is not very friendly with us, can take direct recourse. I can have direct recourse to the members without going to the disciplinary mechanism of the institute. It's a requirement under the Companies Act. So that's very, very important. So these are the reasons why we should essentially comply with standards on audit. Now, one of the remarks made by former MCA secretary, I think he was from Andhra Pradesh, Mr. Injati Srinivas, of the MCA secretary, just before he retired, he quit from service. In one of this thing, he made a statement, interviews. It was like this. It got reported in many of the media, business dailies and all that report. So the elephant in the room is quite in the news. We do not expect the auditors to find needle in a haystack, but they must see the elephant in the room. I hope the message is very, very clear. A needle in the haystack is very difficult to find. But then, if there are so many violations, so many glaring instances of non-compliances, omissions, non-compliance with standards, etc., still the audit is giving true and fair, saying that, okay, Tom is a good boy, then there's an issue. That is what the former MCA secretary said. So since a close meeting of just chartered accountants, I just made this very, very clear. So this is a bit of a knock on the head of every chartered accountant. And those who remember that about NAFRA, when I say when in 2017, I think it's 2017, when Modi ji was invited, Honorable Prime Minister Narendra Modi ji was invited as a chief guest for the CA Day. He did come and he made a statement that, always Abdul Kalam, late former president of the institute, said, the nation so reward a person. He said, chartered accounts are partners in nation building. Yes, we do. We do participate, and partner in the building of India of our dreams. We continue to do that in our own different ways, in making compliances happen, in making projects happen by doing project reports, valuation businesses, empowering businesses, and giving new business capabilities. We spread, help many of the businesses, entrepreneurs spread their wings and fly high. So that is something which is very, very important. But at the same time, Modi ji said, most of you are good, but then there are some of people who are not moving on the righteous path, and I'm going to take them to task. And that time it was evident that NAFRA would be enacted, and it is enacted. And today it's very, very powerful. A super regulator having, supervisory or more stronger powers on the institute. And today now the latest development, very unfortunate development, is that they are getting into the business of formulating new standards. While they could only enforce, ideally, when we thought that NAFRA would only enforce the standards formulated by the institute, and the institute standards are mostly in alignment with, it takes a lot of reference, a lot of leaf from the international standards and practices. NAFRA now wants to play super regulator and say that we are going to formulate standards, which is not that, which I don't think was the real spirit of the law while it was getting enacted. So with that, this is a segment. With that, let us, before discussing standards, let's have a look at some of the audit processes and introspect where we are all still doing it. Opening balance checking from the previous year. Today, I was in a business discussion slightly about 50 kilometers from Cochin, where, the opening balance of last year have not yet been brought forward because last year's audit is not fully concluded. So they have to do a rerun in the software. So it's not done. But as the internal auditor, the statutory auditor, 24-25, opening balance checking is a very, very important exercise. In fact, if you look at SA 510, Standards Auditing 510, it is about initial engagements, opening balances. Internal control evaluation, communicating findings to those charged with governance. Very, very, very important standard. IC evaluation, larger organization, without evaluating internal controls. They are called compliance tests. So only without the compliance test and the comfort or the discomfort you derive out of that, you would decide on the extent of substantive procedures and to what extent and to what depth, drill down, how much down you should drill and search for evidence, corroborative evidence, and finally come to conclusion. Vouching, we call it checking of details of transactions. Vouching is a very, very important exercise, which we all seem to be forgetting. And we cannot leave out details of transactions in an audit, particularly in this kind of very, very shaky, difficult, I would say that slimy audit and business environment. Ledger analysis, verification of assets and liabilities, very, very important. Now, physical verification of assets, physical verification of assets, physical verification of inventories, the management is supposed to do, and we are supposed to oversee. In fact, I did that today, this afternoon, with the client's place. I had instructed them to do, I went with the team That's a fairly large client. So I promised them that I would join, and we did that physical verification. There are a lot of inconsistencies, and they were happy that after a very long time, a real involved physical verification of stock. So the obsolete stock, non-moving stock, scrap which has to be taken out, all those things have been identified, and major discrepancies. So a lot of stock journals will be passed as a one-time regularization. So on. Comparing financial statements with books of accounts. I may sound very, very old fashioned if I say one must get a signed TV. It could be digitally signed, but a final trial balance is to be owned. And they'll be owned up by the management or a finance manager. At least in larger corporations, larger entities, we must insist on this. Accounting standard compliance. Today we have 29 minus 2 accounting standards, and we have Ind AS for larger organizations, listed companies and companies with net worth above 250 crores. They are in the Ind AS space. So other smaller companies, most of our clients, they have to comply with accounting standards. 29 minus 2 standards. Accounting standard 1, disclosure of accounting policies. AS 29, provisions, contingent liabilities, and contingent assets. In between, two standards have been withdrawn. AS 8, accounting for research and development, has been withdrawn long back. And in 2020, they also withdrew the standard AS6 depreciation. Depreciation is now merged with standard AS10 property, plant, and equipment. Paragraph 40 to 60 of AS10 deals with depreciation now. So accounting standard compliance is a very, very important aspect of an audit, because without complying with standards, fair valuations and fair reporting will not happen. It will remain a dream. Schedule 3 compliance. Schedule 3 compliance is also the auditor. It is not primary responsibility of the auditor. But tell me, when Vijayawada or Cochin, most of us, even in the case of listed companies, my 31 years of experience as a practicing chartered accountant tells me that the corporate accountants, most of them, if someone is there online with us, and not to discount on anyone's individual capabilities, but most of the corporate accountants think that the preparation of financial statements in compliance schedule 3, accounting standards, recollecting all the notes, information for notes on accounts, aging analysis of debtors and creditors, trade payables, now it's required, evaluation of stock, computation of depreciation, computation of deferred tax assets and liabilities, gratuity provision in discussion with that of an actuary, all that is that of the auditor's job. And we do all that. But strictly speaking, we're not supposed to, but out of compulsions, we do all that. So make sure that there is proper Schedule 3 compliance in the audit. Analytical review. Analytical review or overall test, ratio analysis, trend analysis. We circle around and see that what is that, we compare and finally say that there's some issue. Then we try to sort it out. CARO points, where CARO is applicable, informed reporting we have to do. So this is audit process. With that, we'll go to the specifics of the standard one by one. SA 200 is a takeoff standard. It's captioned as overall objectives of the independent auditor and the conduct of an audit in accordance with standards norm. One thing which is highlighted in 2008 is the professional skepticism. This standard was originally known as, those who are in academics, some of them are with us, it is known as basic principles governing an audit. Now it has been renamed. The highlight of SA 200, the revised SA 200, revised in 2008, is the extra focus. Excuse me, I'll just take a short break to get a glass of water. No.
Attention to the members, friends, our branch is taking up the AI 3-day course from Jan 1st onwards. Anybody interested to wanted to take up that course, they can enroll the same by filling the Google form, so that if 40 members are prepared to come, then we can form a batch. So I request every member to kindly note down the things as per the things. And also, I request you to kindly inform us whether any specific program is to be conducted. Thank you, sir. Over to you.
Thank you, GSR, sir. That is, keeping the members engaged and informed during a short break I've taken. So this AI course is of great relevance. Things are changing. Technology is taking over. And I think a large number of members should join this. And I think in Vijayawada, I think you'll need more than one, by many batches you would require to accommodate the large number of members you have there. But young members, particularly, they would jump for this, irrespective
We
of age.
already completed one batch, sir.
Oh,
We are
great.
again planning for the second batch.
I'm not surprised. You are in charge, right?
Yes, sir. Not that
Okay.
much. Okay.
Yeah. Okay. Thank you, members, for staying back, and apologies for the short break. Yeah. So this professional skepticism is being a little doubting. See, in a large audit, government audits, any audit for that matter, we have to ask a lot of relevant questions. Now, doubting mind is that's why I've shown, a dog with a lens, not without reason. So, an attitude that includes a questioning mind, being alert to conditions which may indicate possible misstatement due to error or fraud, and a critical assessment of the audit evidence. Auditor can't just be a watchdog anymore. Now, there are two things which I would like to highlight here. A friend from Bangalore, if some of you are regularly reading the business line, Mohan Alavi, very dear friend of mine, he regularly writes in the business line. I would urge young members to read at least one business daily, at least online daily, because it contains a lot of relevant information for the profession. The editorials, some of the topical articles that come in there are very, very relevant, quite readable also. Mohan was writing an article, had written an article on the audit failures. And he started the article by saying that the audit profession and its members have been clinging on to Kingston Cotton Mills case delivered in 1872, where the learned judge said that the audit is only a watchdog and not a bloodhound. He is justified in relying upon the evidences given by the tried servants of the company. That was long ago, long ago. So the regulatory environment has changed. The expectation gap is steadily increasing, as we thought that it would reduce, and the expectations are so high. So, and therefore, the auditor can just not be a watchdog. He doesn't have to be a bloodhound, but he has to be very, very alert to situations which can be vulnerable to fraud or irregularities in ensuring that he does a fair report. Now, in one of the discussions, our past president, Amarjit Chopra sir was saying this, Are Baba, what are you talking about? Watchdog, bloodhound. Anyway, we are dogs. At least bark here. So are we barking or are we sleeping after seeing that the thief is entering the house? Is a key question, mood question, which one has to be asking, introspecting on this. And then you have to be more alert. That's the whole point which the professional skepticism is talking about. And in the IL&FS debacle that happened, NAFRA came out with a 305-page report. I had a cursory reading of that report. And if you take the crux of it, if you look at the crux of it, I can say two things. One is that the firm, the multinational firm, as you know, did not exercise professional skepticism to the extent required. The second point is they did not collect sufficient appropriate evidence. Sufficient appropriate evidence they did not collect. And in the result, there were irregularities to the tune of 92,000 crores in the IL&FS issue that happened. And it was audited by a multinational firm, as you know, Deloitte, Haskins and Sells. And they were taken to task, and rest is lot of work is being done by NAFRA. They issued a white paper on the audit practices, independence declarations of the big four firms, and they are now the next level of larger firms. They are bringing them under the lens. So SA 200 tells us to exercise more professional skepticism and being more alert. Includes being alert to audit evidence that contradicts other audit evidence. It contradicts from two sources. Conditions that may indicate possible fraud. Reliability of documents are doubtful. And so when we do the introspection, I have something put in a blue band in yellow letters, the bottom of the slide. Look at that. That is an action point, practice points one should really introspect and ask. After this session, we can have so many sessions, but It's very important that some of the learnings, some of the takeaways we are putting to practice. Are we skeptical enough? Asking questions, being a little doubting. So most of the cases, in the case of medium-sized organizations, what happens is the accountant of that client probably would send the tally data or the financial data by email to, may not be to the firm side, even to the student who's in charge. In our office, this has happened. The student who is in charge had sent that data and say that his job is over. And we start working on it without getting a letter of engagement, etc. Now, are we asking relevant questions, being a little doubting? That's very, very important. And doing deep drills wherever required. And if you're not doing it, let us do it. That is action point I would like everyone to put to practice this after or as a takeaway from this session. I have a sore throat, so a bit of a cough also. So please bear with me. SA 210 is about the letter of engagement. We call it LOE in our office, letter of engagement, letter of audit engagement. So the point is, look at the bottom band and then we'll start from there. Are we obtaining letter of engagement without fail? A format is given in the appendix to that particular standard. It talks about the objective and scope of the audit, responsibilities of the auditor, responsibility of the management, financial reporting framework, reference expected, form and content of the reports to be issued, etc., etc. Now, in a disciplinary proceeding or anything that we are asked to face on, they would probably ask the first question is, where is the letter of engagement? I have heard from my members, my friends who have been put to the disciplinary proceedings. They say that they ask most of the questions are like a checklist on standards and auditing. Therefore, we must essentially obtain letter of engagement before we start the audit. SA 220 we'll skip because SA SQC 1 is on quality control. So SA 220 according to me was not really required. But let me tell you, the spirit of SQC 1 and SA 220 is slightly different. And SQC 1, the quality in an audit, I used to ask, I've been teaching for 20 long years. So I asked the question, students a question, this question on how do you ensure quality in an audit? You won't get many answers. So I would ask them a question. How do you bring quality into a sambar or a stew that you make? So it's about the ingredients. So I would say that quality in an audit, there are two things, if SQC 1 and SA 220, if you see. One is about the processes that bring. Processes would mean the compliance with standards and auditing is what processes. That's what we are going to discuss this. So one has to have a set of processes very clearly made for this. And then this is SQC 1 referred to, excuse me. Sorry. Yeah. So one is about processes and two is about having the people factor, the HR factor. People would think I'm a sole practitioner, I have just 5 or 6 member team. How do I ensure quality in people? But today, let me tell you that we need to have an inspired, instructed team of people in our team, without which it's very, very difficult to discharge audits. You have a quality perception, but then who is there to implement? Who is there to monitor that? Who is there to really apply those quality perceptions into the work that we do is very, very important. So we have, for example, in the last many years, I think more than 8 years now, we have an induction program for our students. I'm sharing a personal experiment initiative that our firm does. We have what we call it as an induction program for newly joining students. So all the partners, 5 of us would, they are taken to a nice hotel with a very pleasant learning environment. And it's a full day program. We have a booklet. My audit partner would give the insights into the auditing practices of the firm. A lot of discussion on standards and auditing. There's a compliance partner who would tell them about the compliances that we do under the company law, FEMA, ROC filing, all those things that we do. There's a discussion. Another partner on GST, another partner on internal audits and technology and so on. So quality is about processes and people. And the quality, the people aspect will never happen without proper training and proper instructions. And the new gen, they're very smart, but then they need to be closely supervised. That's what SQC1 says. The firm has an obligation to establish a system of quality control. The firm and its personnel comply with professional standards and regulatory legal requirements. Reports issued by the firm are the most appropriate in the given circumstance. So the question here is, SA 220 is making a cross reference to SQC1. Do we have a quality perception, a policy? Is it being monitored? Are they being reviewed and applied in execution? How good is our team? These are the questions which everyone has to ask. And that's very, very important that we have this in practice. Though for those who logged in late, I promise that I'm going to share this slide deck with the Vijayawada branch, and this will be shared with you as a point of reference, which would be useful. And I would be only happy if you have any questions. I'll leave my phone number and mail ID at the end of the presentation, so we can continue to interact. That's how we learn together. So this is about the SQC1 and SA 220 and the cross-reference SQC1 quality control. Now, SA 230 is a very important standard. It's about audit documentation. Now, I don't know if some of you have attended the GlobePack year before last in Gift City, when our then President Aniket Talati. Aniket was, in a speech, he said, the president of ICA doesn't get topical in a large conference like this. But then let me tell you something from the recent experiences as a council and as a president of the ICA, let me tell you, the mantra you have to have is not documented, not done. That's the importance of documented. Not documented, not done. When we go for I asked this question today afternoon again, how do you have you done physical verification earlier? I said, we have done it not recently. Said, when was that? They were not able to recall. So I raised my eyebrows. There's a frown on my face. Then I asked them, is there any reports? Reports are not there, sir. Reports are not. They start. Then it is very clear that if at all it was done, it was for the sake of it. It is not done properly. So therefore, that's a point which one has to be very clear. The auditor should prepare audit documentation that's sufficient to enable everyone to, not only an experienced auditor, the nature and timing of audit procedures, the result of audit procedures performed, significant matters arising during the audit, the conclusions, etc., etc. And audit documentation today is not just manually writing down all those things or typing a lot of things. The things have changed. Documentation could be digital documentation. It could be photograph. It could be visual evidence like photographs stored in the client folder. Today, I took some photographs. I can show you some of the photographs which I took there and say that, okay, this is not the way to maintain stocks. So this is not the way to stack things. This is an internal audit assignment. Statutory audit also, you have to do all that. The physical verification, for example. When that is being done, there's absolutely nothing wrong in taking a video. And that video file can be part of your audit documentation, the client file in your system. We have had such experiences. So also today, since I finished my chairmanship and I didn't contest for the elections, I had a lot of time in office. So I called a student for an audit finalization. I said, let me have a look at the LS notes, ledger scrutiny notes. Then the student very promptly says, so that's in the client folder under LS, audit 23-24, working papers in that LS notes. So we go through that. It's an Excel sheet with the observations and we put our comments. Some of them request a reporting and I'll put reports and then that's closed. So the question which we have to ask, the introspection that we have to do is, how good is our documentation? We are asking ourselves. I'm not asking you, we are asking ourselves. It's an introspection. Physical but digital. Will it stand a test? Will it pass an examination? Examination is a disciplinary proceeding or a NAFRA proceeding against you. Will it stand a test? It's very, very important. And we have permanent documents and working papers. And for that, I would strongly recommend that if you're planning to improve, to be better in practice and to be more compliant and to be maximum away from any disciplinary proceeding, insulate yourself from all that, then there's audit working paper template of the AASB. We can go to the AASB resources under AASB, there's audit working plate template. There are audit working papers template. There are about 9 chapters, if I remember correctly. Very, very detailed documentation guidance you will find there. But I'm sharing with you in the WhatsApp, the audit kit that I'm sharing has got an audit program. of manufacturing companies, trading companies. We cannot standardize an audit program. That has to be customized case to case, year after year also sometimes, because businesses may change, a new business line a client could start. All that's very, very important. So I'll be sharing with that, but this AWP audit working paper template of AISB is very, very good reference, very effective reference. 240 is auditor's responsibilities relating to fraud in an audit of financial statements. So here, what is being highlighted is that the auditor cannot rule out the possibility of a fraud. So he should approach, and the earlier training that we got in the early days, seniors would know, and seniors would probably tell me also that the training that we got is like the auditor should not be suspecting that there's a fraud. Think that the preconceived notion that there is something wrong. But today it has changed. The auditor should not approach with the preconceived notion that everything is fine, right, and proper. That's also a dangerous approach. Possibilities of fraud are there. Self-interest is on the rise. There are fraudsters across. So one has to be careful in dealing with audit situation. So it can happen. A remote location, particular person in charge in managing cash and managing stock, inventories that can be sold off. There's no physical verification. So he can play around with the inventory, the thing that he can solve. He can sell or he can take it for his personal use. It could be garments, it could be jewelry, it could be anything that is for regular use. It could be FMCG products. So all those things one has to be careful. So the key question is like, do we evaluate the possibility of fraud? And if we smell the rat, like if we suspect something, that's a layman's term that we use to smell the rat, then do we reframe the plan and until we either confirm or dispel the doubt? Confirm that yes, there's a fraud. Then there are a lot of things which we have to do. Today in the listed space, I hope you have heard of NOCLAR also. Non-compliance with laws and regulations. And so we have to blow the whistle really louder, not for the shareholders, just the shareholders to hear, for the regulator also to hear. It could be the SEBI or the RBI. So until we confirm or dispel the doubt, we have to do deep drills if you smell the possibility of a fraud. SA 250 is, yes, the standard which talks is about the responsibility of the auditor relating to laws and regulations in audit of financial statements. This question often arises, is the auditor expected to ensure compliance with all the applicable laws of the land by the client? The answer is essentially no. Essentially no, that is not his job. That is beyond the scope of an audit. But the standard says if there is an impact on the accounting and audit function, yes, then he has to take note of it, give a note, insist the management on providing a note on it, showing it as a contingent liability, or if it's a materialized, a show cause notice has been issued by, let's say, the Pollution Control Board has issued a show cause notice. It is replied, so there is a possibility that a penalty would be levied. And show cause notice, as a penalty has been levied. And they're admitting it, therefore that has to be provided for if not paid. And also that what happens during the course of the audit to come to a situation where there's a stop memo and that the product manufacturing facility or the processing facility of the unit has been sealed, saying that it is polluting, it is environmentally hazardous, and the pollution control has put a seal, then there's a big question, larger issue of going concern being at stake. So these are the audit considerations which one should keep in mind. So if the accounting and impact, accounting function, then the auditor should take note of and act on it. Are the non-compliances impacting, warranting an accounting hit or disclosure? If yes, we have to do that. And NOCLAR is whistleblowing, I've already mentioned. SA 260 is the standard communicating with those charged with governance. The standard says that you're doing the auditor from large company or a medium-sized company or even a non-corporate entity. And I've said that in Andhra Pradesh, particularly in Andhra Pradesh, a large number of firms which are larger than corporate, with thousands crores of turnover. In fact, we had a client, we still associated with the Eastern Group Curry Powder. They're still procuring huge quantities, tons and tons of red chili from Guntur belt. So they have seen some of the firms, saying that it comes with a name also, so and so Reddy or Ravu firm, like that. I've seen and everywhere when we're doing an audit, if we come across situations, lapses in the system, etc., and that is where the audit perspective, the audit approach has to change. As a statutory auditor, to be effective, You cannot just confine the preparation of financial statements and a tax computation statements and some year-end adjustments and say that, Sarji, this is the tax which you have to pay and advance tax reminder. It's not that. The audit, when you prepare financial statements or examine the financial statements in an auditor, all the auditing standards should come to play. They have so much of relevance in the context of the audit. So the point here is that if you come across situations, apart from the discussion that you have or the verbal discussions that you have, you should document it and give it to the client that is communicating with those charged with governance. And we call it audit observations in our office. And we also insist on getting a written reply from the management audit officer. We are saying that such and such lapses are there, bank accounts are not being reconciled regularly, inventory management is poor, control over debtors, etc., is poor. And in the case of some of the companies, we have IFR reporting also, ICOFR reporting, internal controls over financial reporting. There we have to get all this information and these lapses we have to report to the management. Do we communicate with those charged with governance in writing observations? Spirit of CAM is also important. CAM is key audit matters. For the time being, it's applicable only for listed companies. But otherwise, this audit communication with those charged with governance. We have audit managers. Some of them are chartered accountants. Most of them are chartered accountants, as we have cost accountant also. So when they're sent for an audit, I see them confining just to the accountant or the finance manager. I said, you are empowered. You have the visiting card where you print an audit manager of JVR and Associates. And some of them say that I'm from Jomon sir's office. JKG's, Jomon Kej's office. And you should go meet the director of finance if it is there. Go just crash into the MD's room with permission, not crashing, just say that, sir, I'm so and so, and hold some discussions. Of course, if there is a large company and the discussions, partners would be involving. Otherwise, even some of the senior auditors I've seen that they confine, just discuss at the accountant's level. Let the accountant deal with our staff, and we should essentially deal and relate and connect ourselves with the top management, the managing director and the director of finance. SA 300 is another very, very important standard. It is about audit planning. The auditor's responsibility to plan an audit in recurring audits and initial audit engagements. There are two things to the SA 300. One is that in a large audit, we should have a proper strategy, the time frame, the team that we are deputing, the thrust areas that we are looking into, the new reporting requirements, possibility of fraud, etc., the previous experience you bring into this particular execution of this particular audit. All that's very, very important. So that's the strategy formation, and that will be followed by a detailed audit plan, which is the audit program. So in our office, we have APM, Audit Planning Memorandum, which is a 2-pager, which is that audit strategy. And then in that the last, before the partner signs, is written execution of the audit in total compliance and with reference to the audit program in the applicable case. So that's the spirit of SA 300, planning and audit of financial statement. Do we plan an audit? Is there an APM and audit program, audit planning memorandum, audit program? Is there review during the audit? You cannot have a fit-all model for any audit program. Can't be. It has to be customized. Even during the course of the audit, sometimes the audit planning memorandum, the initial strategy or the extent of checking, for example, materiality levels, extent of checking that we initially decided may have to be changed. The extent may have to be enhanced. Materiality level has to be probably shrunk a little bit to see smaller transactions, large number of small transactions. Then you cannot confine high value transactions alone. You have to have some focus on the small value transactions also. That's very, very important. So that's what we do, and review during the audit is that. So audit planning is very, very, all these standards in auditing are mandatory by the institute under the Companies Act. I'm just reminding one of the early slides for those who logged in late. SA 315, another very, very important standard. In fact, this is a combination of 3 earlier standards: knowledge of business, knowledge of client's business, evaluation of internal controls, computerized information system environment, AS 29, if I remember correctly. Those 3 have been merged into subsumed and converged into one standard called identifying and assessing the risk of material misstatement through understanding the entity and its environment. Deals with the auditor's responsibility to identify and assess the risk of material misstatements, financial statements, through understanding the entity, its environment, including internal controls. Now, let me ask you this question. What is audit risk? People ask, what is audit risk? Audit risk is the risk of expressing an inappropriate opinion. It is saying that the financial statements give a true and fair view of the position through the balance sheet, of the performance through the P&L account, and of the cash flows through the cash flow statement. When there are material misstatements, errors, frauds, omissions, I would say that, wrong valuation of assets and understatement of liabilities, etc., etc. With a lot of inherent problems in the financial statements, the auditor is saying that it gives a true and fair view. It's like saying that Tom, example, or XYZ, Vinay, who is, is having a lot of bad habits and is referred to saying that he's a wonderful boy. He's a wonderful boy. If you say that, same is the case expressing an opinion about a person or individual. It's the same is the case with expressing opinion on financial information. So that's audit risk. And audit risk could be higher if you do it without understanding the business models, entity, etc., etc. Now, I put a team on a new client who came to us. They are into food processing, frozen foods, shrimp, then the breaded, and the frozen samosa, which the frozen samosas, spring rolls, then the frozen parota, Kerala parota, lecha parota. They also have, yesterday I just tasted that. They also have the garlic naan, which is made, the naan is made in and then it is frozen, ready to eat kind of products. So there the domain is different and they have an operating software. This interface with the Tally Prime. So ask my audit manager, I just went there, put him there, say that the most important thing is to understand the whole process and how the interface between the operating software and the financial accounting software is there. There also we're seeing a lot of problems. A private equity or an individual who is a high net worth individual has invested in there, and she is wanting us to do a complete, thorough system study and internal audit. So that knowledge, particularly in a statutory audit, where it's year-end audit, it's very important that we gain knowledge about the client's business, the internal controls, the accounting processes, even the manufacturing processes. We always make it a point to go to the shop floor. So I went through, and the freezer, the temperature is minus 18. I just stood there only for 2 minutes, not more. You cannot sit there, stand there unless you wear the proper work gear, which is a thermal inside, a jacket, the hoodie, and then you have to have, except the face, which is also with the hoodie, we cover it. So work there, but then it's only a 3 hour, what they call it as schedule for them. 3 hour shift. After that, they changed. Otherwise, there could be health hazard. But I took the trouble. I wouldn't say trouble to understand how the stacking is done. Stacking is done in the cold storage, which is initially they're frozen at minus 40, and then if the regular storage is in minus 18 degree, this thing. So therefore, I just went in there. I was just trying to say. So understanding the process is very, very important to ensure that we have knowledge of business and understanding what is work in progress, what's the extent of work in progress, whether the values are realistic, etc., etc. So do we have a good understanding of the business, the revenue models, etc., entity-specific, industry-specific, and macroeconomic? Standard also talks about knowledge, entity-specific knowledge, industry-specific. And today, macroeconomic environment, the internet is there to help us. So anything that you want to know about, how is the seafood industry doing? And also many of our Kerala people are having now new plants in Bapatla. Bapatla is in Andhra Pradesh or Telangana, I'm not too sure. Bapatla, a lot of people are migrating there because of the quality, good quality of water, the work environment. I think good labor is available and a lot of, catch of seafood and freshwater catch and all that. And the risk assessment, we do that in the light of our understanding of the business, etc. Audit evidence, SA 500. That is, I did mention that the auditor has to collect evidence and document it. The evidence is an external evidence, internal evidence, visual evidence, oral evidence, written evidence, and so on. And evidence that we collect from independent sources, corroborating internal and external evidence, and make sure that they match all those things. So that's the importance of evidence. Obtain sufficient to draw reasonable conclusions on which to base his opinion. Without which we cannot, collecting evidence, we cannot do that. Do we collect sufficient appropriate evidence, written, visual, oral? All that is fine. In fact, during the COVID time, a friend of mine called me and asked me whether we could do a physical verification of stock at his factory. It's a paint manufacturing unit, which has been taken over by Indigo Paints. So I said, it's supposed to be done by your statutory auditor. He said, yes, our statutory auditors is SR Batley Boy, which is in the EY fold. And they are in Pune. So they asked me to hire a local firm of some standing and some infrastructure who can do this in a day's time. And we were engaged, to cut the long story short. And the whole process was being watched, video watched, streamed, and being watched by an audit manager sitting in the EY office of Pune, a Batley Boy. And, my partner and 3 of our assistants went there. The first instruction was to take a groupie in front of the factory, making sure that they're physically gone there. So that photograph is part of the audit evidence and audit documentation file. So that's how they've done. And then the whole thing was video streamed live. She was watching there. She was giving instructions. And by 3 o'clock in the afternoon, then they said, we are done with what we are supposed to do. But now we would like you to take 3 items of raw materials and 3 items of FG, finished goods, do a random verification and report on variances, if any. So that's a kind of, and that all those video file, the selfie photograph, the groupie photograph, all that is part of the audit documentation. So it need not be again written. Earlier, I remember, I did my articleship in Verma, Chennai. We used to do a lot of audits across. Come to Vijayawada, Guntur and all that in those days. I traveled in underserved compartments and overnight journey, done the audit of some banks which have been merged, Nedangadi Bank, 2 branches in Vijayawada and 1 in Guntur. Very long. It was in 80, I would say 89 or 90. So then we would come back with thick box files. That's called the working papers, audit working papers, and that would stack it and all. So now 50% of the audit documentation, mostly, document the evidence that we collect is in digital form. An internal audit report which runs into 30 pages. Yes. As a statutory auditor, you don't have to have a hard copy. Soft copy is enough. You get it mailed across from the proper source, and then you can read it online and take inferences also from there. That's fair enough. That is documentation. So 1 second. Right. Okay. Do we collect? No, I'm sorry. Audit evidence. Yeah. So and evaluate it for drawing our conclusions. Collecting evidence, and the team comes. I remember one of my friends telling me that they went for an audit in Delhi from Chennai, where I was doing articles in Chennai, and they came back with a lot of findings, and they were trying to sort it out. And then one of the partners was in a hurry to finalize the audit. Before discussing anything with the team, when we went for the audit and the observations, he had almost finalized the audit, which was very, very disturbing and demoralizing for the team as went for the audit. That cannot happen. If you have collected evidence, then we have to essentially go through that, take note of and report on what is really relevant. And based on that, we have to conclude the audit. Say 500. 501 is audit evidence, specific consideration for selected items. It's an offshoot of SA 500. To make it less bulky, they have done this. 3 aspects are covered. Certain aspects of inventory, litigation claims involving the entity, and segment information. Now look at the question which I put in down. Do we attend, supervise, oversee physical verification? Any responses? We hardly do, is it not? We hardly do. We hardly attend. We do not attend physical verification of or send our assistants for that. But larger firms where there's high value inventory, it is mandatory. It's important. It's relevant that we attend the physical verification and supervise that. Today we were there in the afternoon. I told you at client's place. as part of the internal audit. We did that. First time, it was not stacked properly. I told them this is not the way to do physical verification. I had given advance notice saying that properly keep it stock properly, update the stock records and take an abstract of the stock registers and then keep it ready for comparing with physical stock, offline physical stock with the book stock. And also keep aside non-moving, slow-moving items. There are scrapped items that have been kept separate. It was a big mess. It was a big mess, and also there were inflammable materials lying, highly inflammable materials lying around on the shop floor, very, very openly, and there was no fire extinguisher. That is not part of the job. But I said, you have this inflammable materials lying in there, and is there a fire extinguisher? If something happens, there's an issue. To that extent. So inventory verification as a statutory auditor, we are mandatorily supposed to oversee or depute our assistants and make sure that the stock exists. The management has taken physical stock verification, that mandatory. That's why it's given as an offshoot of SA 500, 501. Litigation claims involving the entity. You are perfectly, it is perfectly, you do well. There's no prohibition on contacting, after informing the client, contacting the client's legal counsel and seeking for information, cases filed against, cases filed by the company, etc., possible outcomes. So they have to be properly disclosed. So lastly, segment information, where accounting standard 17 is applicable, and in days, I don't know, in days 6 or so, the number business segments where segmentation is mandatory, segment information is mandatory, we have to ensure that that is properly done. So the question we ask is, do we attend, supervise, or see stock verification? Inquire about suits filed by the company against the company. Analyze segment information. If not, we must do it. Yes, sir, 505 is external confirmations. Do we obtain external confirmations now? Audit evidence obtained from independent source outside the entity directly by the auditor is much more reliable than audit evidence obtained indirectly or by inference. So the circularization process, as you know, you should get every collection, and now they mostly come by email. The balance confirmations of debtors, creditors, loans, advances, etc., etc. And the maximum that we do today, at least that I hope we are doing, is to get the bank confirmations. That's on the account balances, loan accounts, term loan, ODCC, bank guarantees outstanding, all those things to be shown under contingent liabilities, bank guarantees. So that is very, very important that we collect external confirmations. Selecting we don't take 100%. Even confirmation is not there. If confirmation is not available, we are strongly and we always advise to look into the subsequent period. We do not finalize an audit in April, except very few. So when you are finalizing an audit in July 24 of the 23-24, July 24, 31st March, the receivables, we can see what is the subsequent behavior, whether they have been subsequently collected. Then we have external evidence, at least the comfort that they are not fake outstandings, fake receivables, though the confirmation is not available. But to the extent possible, we should obtain confirmation of balances, not only of balances. What about documents? The client is saying that so much of our stock is given for machining, or we are outsourcing. So therefore, with the contractor, with the sales consignment agent, we should get confirmation of that. And also of documents. Typically, what can happen is when we do an audit, particularly for the first time, we say that the original title deed of land is with the bank, collateral security for the working capital loan. Fine, that's perfectly okay. That's an accepted business practice. But how do the auditor ensure? Get a confirmation from the bank saying that the original of the title deed or sale deeds are with us, held as security. We must obtain that. Otherwise, it can be played around with. How do we pick the lot in selecting the audit? I mean the receivables. How do we select the lot is non-moving balances, debtors balance with credit balances, creditors balance with debit balances, overseas debtors, all those things. We have to stratify the data and then take a proper sample and draw conclusion and send a confirmation request. Let's change if we are not doing it. Not on accounts, it should be insisted upon that then we have to qualify, or if not qualify, at least emphasis of matter paragraph. Emphasis of matter paragraph is as in SA 706 time permits. We'll have a glance at SA 706 also. That's a very, very important standard. So that was about external confirmations. One must do that. 510, I did mention that opening balances. In an initial audit engagement, the auditor should make sure that the opening balance do not contain misstatements that materially affect the current period's financial statements. Appropriate accounting policies reflected, etc., etc. Now, opening balances, if at all we are doing, I would like you to recall, go back to one of the earlier slides which I showed at the beginning of my presentation, about audit processes. If at all we are checking opening balances, it is just clerical checking, and the students have the use of software. The assistants use the software and do a matchmaking. And if that's an exception report, there are some differences. That is sorted out. And then opening balance are correctly brought forward, etc. etc. Tally data split properly after the closing entries. So they match. But it cannot just be a clerical exercise. It's not, in our earlier days, we should tick there and tick here from the previous year's schedules. But that's not enough. If there is in the new audit, if they say that there's a balance of 2 crores, land account, 2 crores, previous balance sheet, 2 crores. Tick there and tick there, is that enough? Absolutely no. We have to ask for the title deed of the land, the title deed, the original title deed of the land. And it could be with the bank, get a confirmation, etc., etc. Make sure that it's in the name of the client. In fact, in Caro, there's a reporting requirement. Similarly, you say that vehicles, motor vehicles or motor cars, 1 lakh 20 crores, 1 lakh 1 crore 20 lakhs. The breakup of the vehicles, which are the vehicles, the RC book, the tax paid, etc., etc., all the details, making sure that the vehicles are in the name of the company or the entity. That's very, very important. So is it only a clerical exercise? Not enough. Are the balances maintainable? Receivables, payables, the very old receivables. We'll raise our eyebrows and say that do we require a provision? Because in the new Schedule 3, there are vertical classifications which are up to 30 days, 30 to 60 days, 60 days to 1 year, and 1 to 2 years, 2 to 3 years, etc. So anything more than 1 year, a receivable has to be seen with suspicion. If it's a running account, all the balances are remaining, current bills are being paid. The non-moving account, maybe the client himself would have vanished. So all those things have to be taken care of in the opening balance checking. Analytical procedures is another standard where it talks about overall tests, ratio analysis, trend analysis, etc., etc. Also encompass such investigation as is necessary of identified fluctuation. For example, the GP, there's a huge fluctuation. Last year, the GP gross profit was 25%. This year, it is just 18%. Or from 25%, it jumped up to 40%. It could be on account of various issues. In one of our earlier cases, there was a totaling mistake in the Excel sheet. Abstract was taken, exported to Excel, and the closing stock valuation. The last 2 rows, which were inserted later, last 2 rows were not included in the closing stock. So that came to close to about 1.8 crores, the total. And we're not able to find out what's the reason because the closing stock was down, less by so much. The GP had gone down. Raw material prices all remained more or less the same. It was a rubber-based industry. So then we finally found that, okay, this cannot be the case. Stock has to be actually more. And then suddenly the clerk came up and said, sir, this was a mistake. This may sound like a story, but this actually happened. This is a real incident I'm talking about. Incident which I'm talking about from my experience. Do we do ratio analysis, trend analysis, and analyze the adverse trends? If not, we must do that. That is analytical procedures. Audit sampling. Now listen, sampling is to be done. We're not doing any 100% verification. So you take the audit of a company in Vijayawada, about 40 crores of turnover, and large number of invoices, large number of purchase bills, large number of employees, large number of customers, vendors, inventory, huge amounts of inventories. With all that we do, and there is a 12-month period. So from out of that, you say that analysis of transactions, vouching, from out of the 12 months, that's a population, you take a sample. How you draw the sample is very important. The crux of the standard is that most of the auditors, you and I included, resort to judgment sampling. Judgment sampling is where we decide. The student would probably ask, sir, I'm going to do vouching, for example, or verification. Which all months should I cover? I would say that last year we did, it's like a mental plan. Last year we did August and February. So this year you do maybe October and March. That's judgment sampling. That's not maintainable. That's not defensible. So to an extent possible, they say that you should use statistical sampling, rational methods, or methods, technology-based sampling, statistical random numbers, or computer-assisted selection of samples, etc., etc., so that the randomness is ensured. What is the most important attribute that you and I expect, or anyone would expect out of sampling, is that the sample that we select. When I'm taking classes to a batch of 60 students, I want to pick a sample of 2 students. Maybe I would stratify boys and girls, or graduates and non-graduates. From out of which I'll pick a sample, stratify, and finally, they should be representative of the population. That's a very important attribute to ensure that we should have a rational, technology-based, rational selection method. That's what it's talking about. The auditor shall select items of the sample in such a way that each sampling unit of the population has the equal chance of selection. That is the randomness I was talking about. How do we pick the sample? How do we ensure randomness of the sample? Use rational methods and technology to support that. 570 is a standard which, if I remember correctly, during COVID time, we did online program in Vijayawada also. A lot of branches wanted to do this during the COVID time. And some of the businesses were almost hitting the dead end, closing down, not able to pull on. So how do the auditor deal with this going concern issue? That is what is addressed and dealt with in SF 70. The going concern, if it's at stake, the auditor should make sure that there is a proper plan for taking it forward. Temporary closures, temporary reduction in business, substantial reduction in business also, temporary due to business cycles, all that's okay. But if it is really going to hit a dead end, and the management is planning to close down lock, stock, and barrel, as they say, then it's very important that the auditor takes note of it. A lot of accounting considerations should have moved. So the going concern is at stake. Then what happens is, even the long-term assets, or what we call it as the tangible assets, non-current assets. Non-current assets also may have to be written down to realizable value. I'm going to close down. I'm going to sell my land, my building, my machinery at a throwaway price sometimes because distress sale. Inventory, of course, put up for sales. I have to realize all my receivables and pay my debtors, creditors. So out of the receivables, I may realize when it's closing down, people would take advantage. I may realize only 70%. Similarly, my creditors also would probably settle. If they're considerate enough, they would settle for something less. All this has to be taken account. The bank would give a one-time settlement of OTS proposal. So I can write back some of the liabilities, write down some of the assets. So that's very important. We assess whether material uncertainty exists relating to conditions that may cast significant doubt on the entity's ability to continue as a government. Now, in CARO, there's a reporting requirement on the basis of the financial ratios, on the basis of the management plans, etc., etc. Does the auditor expect any material uncertainty in the entity going forward for at least 1 year? Lucky that they asked only for 1 year, not indefinitely into the future. So we don't have to learn astrology for predicting that. Based on this, for example, if the current liabilities are heavily in excess of current assets, net equity ratio is 3-4, debt is 3-4 times that of equity. Recently, a friend of mine approached me. They're saying that there's a proposal to become a franchisee of a particular company, which is into furniture, kitchen equipments, and all that in Chennai. This person is in my hometown, which is those who have come to Sabarimala would know. Sabarimala is just 40 kilometers from my native town. I live in Cochin, work and live in Cochin now, though. So my native town is about 65 kilometers from there, about 40 kilometers from there is Sabarimala. So this guy came up and his friend came up and said, I want to take up a franchisee of this particular company. So I immediately asked my team to do the master data, and then we did an inspection, public inspection, got all the details. The company is in deep trouble. So they are wanting him to pay about 2 crores for a franchisee in Chennai, where the agreement says that the lease agreement will not be in his name. Lease agreement will be in the name of the company. The business will be run by the company. The inventory will be in their name only. I said, what are you going to do after paying 2 crores? And the company is in deep red, deep trouble, hugely leveraged. So they just want your money and they are offering him 10% return or whatever percentage of the thing, which is whichever is. For that, they would give post-dated checks. I said, will you have the time to go and file a case? Jurisdiction is Chennai jurisdiction. It is Mumbai jurisdiction. File a case, and after that, the checks gets returned. And it was very difficult to convince him. Some people are. I said, this is my last advice on him. I don't have any more time. I've been very carried, a close friend of mine. I said, look here, please don't call me. You can call me for anything, but not for this. This is my. I've given my clear cut answer. No, no, no. So that company is thinking, and based on that basis, and they want people who are resourceful and who are okay to give some money and take some return. Money will never come back. That'll just be wiped off by the banks which are waiting for some money to come into the overdue loan accounts or become NPAs also. So we do think about this going concern issue and analyze the situation. Indicators, there are many indicators. Part of the business have been closed down. Employees have been retrenched. Substantial number of employees have been retrenched. There are statutory overdues. GST not paid. Income tax is not, TDS is not paid. PF, not paid. All the loans have become NPS. And the product is not in demand in the market. It is outdated products. Huge amount of non-moving inventory. They're all indicators that going concern is at stake and the company would soon sink as a ship. SA 580, my dear colleagues, this is a most important standard. Are you obtaining MRL, management representation letter, for every audit? If not, please do it. The auditor should obtain written representation from the management and based on the format which is given, SA 580 as an appendix. But my audit kit, which I'm going to share now, will have all this, but do customize and work on it. Yeah, 1 sec. So this is a very, very important standard. And what's the key question? Do we obtain MRL? Has that been updated 21-22 particularly, because that is a year of change and we must. And written representation support other audit evidence relevant to the financial statement. And it cannot be taken as a substitute for audit evidence that you collect. So MRL, management representation letter, I'll soon share the formats with you or with Jayant and then or Ravi Kishore, and they can share with you. Okay, so we move on to the last part of the presentation. This is about the reporting standards, SS 700, forming an opinion and reporting on financial statements. The revised standard talks about the title, addressee, opinion comes first now, basis for opinion, going concern if it's at stake, key audit matters for a listed company, auditor's responsibility is a paragraph, other reporting responsibilities is there. We give about a lot of things, and this year audit trail, signature, date, place, and of course the UDIN. UDIN is a very, very sacred thing. UDIN is your insulation against unscrupulous players. There are tax practitioners, there are, a lot of people who are GST practitioners. And in our office, it's a total no entry to those guys. All India Federation of Tax Practitioners, many of the chartered accounts are part of it. I'm personally and professionally against that. We should not become part of that group because we have our branch groups, our various WhatsApp groups and communication groups, professional circles of groups. And these people who play around. So I've seen some of the members, the OTP go to the practitioner's phone. The OTP should come to, the OTP for the UDIN should come to your phone, your number only. You should not let anybody, because there can be a lot of misuse. And today that's also being monitored, keeping in mind the maximum number of tax audits of 60 that can be signed by a member. So there are members who signed 300, 400 audits, and the court finally decided that's for the institute to decide, etc., etc. There's no finality, but the disciplinary cases against them, I think, is taking a soft stand now. But let us be judicious. Let's be careful. There are more than 60 tax audits. Yes, think of another partner or getting network done, partners or your own network people do it. And Udin has to be very important. That is in the context of auditor's report that I was referring to. Key audit matters is only for listed companies. See, key audit matters is something which there's a particular issue which have come up during the audit. For example, inventory, non-moving inventory, obsolete inventory, huge amounts of it. And there's a disclaimer saying that this is a concern. And they're valued at full value, at purchase price or whatever. So the audit is saying that this cannot be valued at the full price. And finally, the management agrees that, okay, give us one more chance. We would write down it by 30% this year. And we also have an order, subsequent period. They are probably able to show you an order of for some of these things which are for a lesser price. Based on that, the auditor would probably not qualify a report. Probably instead of a qualified report, he would go for an EOM, emphasis matter paragraph. Then that they are all key audit matters. So even EOM is not there. KIM is where a point has been discussed and management has given satisfactory replies so that you decide to drop a qualification. But this has to be given in the auditor's report, not as a qualification, as key audit matters. And those who have seen the listed company audit reports now, it is given in a tabular form. On the left-hand side is a key audit matter and the auditor's response. That's how it is shown. So that is something. Are here KIMs discuss, sort out, report, and those are with governance communications. All that has to be taken into account. We did mention about SA 260, where the auditor is required to communicate with those charged with governance. There's a very important point he has communicated and the management has explained. If it is of substantial, magnitude and impact, then that should become part of the key audit matter reporting in the auditor's report. SA 705 is about modifications of opinion in the auditor's report. Clean report is true and fair. Qualified opinion, how do we give qualified opinion now? The heading of the paragraph itself will change. The opinion paragraph will be captioned as qualified opinion, qualified opinion. And the second paragraph will be basis for qualified opinion, in which we would say, what are the basis for giving a qualified opinion? And in the opinion paragraph, we would say, except for, not subject to, the all terminology is saying, except for matters mentioned or referred to in the basis for qualified opinion paragraph, the financial giver true and fair. The third one is a disclaimer where the auditor is saying that he is not able to obtain sufficient evidence and therefore he's not able to express an opinion. In a case where it's a management dispute last 2 years, we have been issuing a disclaimer. In a group of companies where this dispute is there, some of the information is not forthcoming, and based on that, we're giving a disclaimer. Adverse report is where the auditor finds that if he wants to give a qualified opinion, except for 1, 2, 3, 4, 5, and the list is going endless. So at some point of time, technically speaking, it becomes too material and pervasive. It covers many areas, and therefore, true and fair is totally vitiated, and it's not a qualified opinion. At that point of time, he says that it's not except for the financial statements do not give a true and fair view of the position, performance, etc., etc. And what's the key point? What's the question which I would ask us? I mean, we have to introspect this. Are we so used to clean reports? Is it a sin to issue a qualified report or a adverse report or a disclaimer? Absolutely not. If it is appropriate, we should qualify or give an adverse report. And is there a scare? Because what if I give a report? Will they feel bad? Will the changes from the auditors? Auditors cannot be removed just like that. Under the Companies Act, the auditor is appointed for a period of 5 years. He cannot be thrown out like a curry leaf. So those installations are there. Unjustified removal of auditors, there are a lot of ways of looking at it and a lot of things which we can do if such a things happen. So therefore, we should give the most appropriate report. Issue the most appropriate opinion is what been suggested. So about a year back, I was doing a presentation in Belgaum, and a very senior member came up and asked after the presentation, Mr. George, good presentation. I like your presentation, a lot of insights. But there is already a clean report lying in the system. No, in the computer, there's a clean report. Why change that? It is very convenient to issue a clean report. And seeing a very senior member, I gave a very soft answer saying that, sir, somebody was good or the financials were good last year. There could be issues. So changing that is a clerical job. You entrust to some of the juniors and make sure that you give the most appropriate opinion. But that, according to me, is a very dangerous perception, dangerous approach to the whole audit process. It is not always a clean report that will be issued. 706 is emphasis of matter paragraph, is where EOM is something of a lesser intensity, lesser this thing than the qualified opinion. It's a safe, soft option than a qualified opinion. Use it appropriately. We are saying that how do we conclude by the EOM paragraph is, however, our opinion in this regard is not modified. It's our opinion is not modified in this matter. That is how we conclude. So that is SA 706. And with that, I think we have covered all the important practice-based standards, starting with SA 200 and the 230 documentation, 220 quality control, 240 fraud, 250 consideration of laws and regulations, 260 communicating those charged with governance. Then the 300 series is planning and audit. SA 315 mitigating audit risk. And 400 is not there. 500 audit evidence, 501 additional considerations, 505 external confirmations, 510 opening balances. And then 570 going concern, 580 written representations, and so on. And then came to 700 on reporting, forming an opinion and audit reports. Then KM is a 701, 705, qualifying the reports, in 706, the emphasis on matter paragraph. So with that, we are completed most of the important standards which I wanted to cover in much before 8 o'clock. So we can have a Q&A session. If you have some questions, I'm only happy to take. But the key point is that in the wake of the new regulatory environment that we are in, the stricter, the stringent situation that we are in, we are under the lens than ever before. The profession and its members, multiple regulators at various levels. So one has to be extremely careful in discharging the attestation function, audit function, and we cannot do it in a very passive fashion. So senior members, I'm not there to advise you. With due respect to your seniority, I would say that try to pump in younger blood who can use more of technology or more current on the recent developments. And after beyond a certain stage, I can also see the change, what has happened to me. I'm 57 now, and the way I used to read and deeper reading and all that, it is diluted a little bit as age catches up. So therefore, there are a lot of things. But I'm fortunate to have a young team. All my partners are my students. So 3 more chartered accountants we have lined up as audit managers who maybe 2 years from now, they stay with us, and if they align with the thinking, the aspirations, the passion that the firm carries, they would be made partners, and that is where we can move forward. So with that, let me conclude thanking every one of you. We almost came up to 93 at some point of time, and I was wanting to congratulate the organizers for if you had hit 100. But 93 is not a bad number at all for an online program like this. And thank you, Ravi Kishorji, Jayant, and of course, GSR sir, for having me online at least for Vijayawada. And when he invited me, he said, come to Vijayawada. I said, not possible at this point of time. I have some personal matters to be attended. So it's online. I immediately jumped at the opportunity. Vijayawada is close to my heart. During my chairmanship, it was Madam Nagavali who was the chairperson. And Prasanna was there. We had a major regional conference, sub-regional conference. I was part of that. And like the Andhra food and the camaraderie of Vijayawada members always enjoy. So at some other occasion, I'll surely fly down and come to Vijayawada and be with all of you.
Definitely,
and with
sir,
that, big thank you. And if I think there's in the chat box, there was question, somebody raised his hand. There are questions, sir. I'm only happy
we'll
to
start
take.
with the Q&A session, sir. Vijay Kumar, sir, hope you have some question to George, sir. Please go on with your question, sir.
Unmute everybody.
Sir, good evening, sir. Am I audible?
Yeah.
Good
Vijay
evening,
Kumar,
sir.
sir, you are audible. Please go
Before
on.
that, CA Dundi has asked this question whether MRL required to be obtained for internal audits also. No, internal audit, it is not. Internal auditor is identified with part of the management. Technically speaking, external audit is an audit of the management. Internal audit is an audit for the management. So we identify there. But then the MRL there, it is not required. Normally, MRL is not obtained. It is interacted, discussed, and sorted out. There's no former MRL contemplated in internal audit. Yes, sir. Yeah.
Yeah,
There are
Vijay
some
Kumar, sir,
compliments.
please go on.
There are some compliments also in the chat box. Thank you. Honored to have the response that way. And I was happy that so many of you stayed back. Now I will wait for the questions.
Thank you, sir, for your good explanation. You were good this one. And sir, is there any turnover limit for what you call qualification of the audit report?
No.
That
There's no call. Even in a small audit, if you're not able to get the requirement, if it warrants a qualification, yes, you have to qualify. There's no turnover limit.
So we have to maintain. We have to ask the client about standard operating procedures, all those things. For even turnover below the 20 crores like that also, small companies, etc.
Yes. Even a small company, because audit qualification has got nothing to do with the volumes.
Mm-hmm. Okay, sir. Thank you, sir. Thank you.
Yes.
Members, you can also drop in your questions in the chat box so that Jomon sir can reply.
2 new messages. No questions in the chat. Okay. All name and membership number after log. Okay, that's the instruction.
Jayant, go ahead with the vote of thanks.
Yeah. So as like no questions in chat box and also there are no direct questions shooted to Jomon sir.
One question
thank you
is
very
there
much.
from B. Murali Krishna.
Is there a chat box?
Yeah.
Applicability
Let me
of
check.
SAS
Or
to
he
small
can
and
speak up.
non-corporate entities. Okay, yeah.
Applicability of SAS to small non-corporate entities, especially matters of going concern. Yeah, Ms. Murali Krishna. Now, I did mention the applicability of SAS is not whether the entity is small or the practitioner is small. If we are expressing an opinion, like a small non-corporate entity, so non-corporate entity is I hope that a non-corporate entity, though it is small, it is subject to tax audit. Now, tax audit, if it's applicable, the Form 3CB, we are expressing an opinion. Therefore, all the standards would apply with the same force as much as it apply to a Reliance or Infosys to this particular non-corporate entity also. But something which I forgot, I will take 2 more minutes, Jayant, on this. I did mention at the initial part of my presentation that we have to discuss an SAE and an SRE. SAE 3400 is examination. Before that, I will discuss SRS. Standard on Related Services 4410, SRS 4410 is on engagements to compile financial information. I'll ask you a question to Mr. Murali, B. Murali Krishna, that, a client with a partnership firm with a turnover of 80 lakhs and a profit of 10 lakhs is approaching you for the first time. Sir, we would like you to get the accounts audited by you. We want to appoint you as auditor of the company, of the firm. Now, he's approaching you, technically speaking, because being a partnership firm with a turnover of 80 lakhs and a profit of 10 lakhs, he is not required to get audited by under any law. It's not a company. Under the partnership is not there. And the tax audit also is not there. He's approaching you seeking expertise to prepare sensible financial statements. I prepare financial statements and probably file a tax return. And do we have to sign those financial statements? We do not have to, but most of us are addicted to signing. My sincere advice to you, my humble advice to you is that discount the maximum and honor only the minimum. I have seen many chartered accounts preparing statement of total income of an individual salary client or any client on the letterhead of the chartered accountant form. It's actually prohibited. It's a self-assessment that we do. It is not an auditor's report. It is completely his property. And some of the information is based on what he has given. We have taken from AIS or 26IS or whatever, TIS or whatever, but we should not audit it. So this particular client, we are not supposed to sign. And many of us are still signed just like that, put the seal and sign. It is prohibited. Some of put saying that prepared from the books of accounts produced before us, etc., and sign. It is prohibited. Provisional subject to audit. It is prohibited. So please refer SRS 4410 engagements to compile financial information. And there's a report mentioned here, there which is captioned as accountant's report on unaudited financial statements. I repeat, accountant's report on unaudited financial statements. The term audit should not be used. Audit fees or auditor's remuneration should not be used at all, because it's a nil assurance engagement, technically speaking, nil assurance engagement. Even in audit, we give only reasonable assurance. Absolute assurance is not there. So, but we are signing all this. It is prohibited. We can be taken SRS 4410. Now the situation changes. He is filing a return and you're not signing. Situation changes. He goes to his branch manager. Okay, Canara Bank, Vijayawada branch, he wants to take a loan, ODCC. He goes. The manager says, 2 years audited, current year provisional, 1 year, 2 years projected, all signed by chartered accountant. Yes or no? No,
Yes,
we sign. We're not supposed to sign any of this. Provisional, we should not sign. Projected, we should not sign. But if you look at SAE 3400, it talks about examination of prospective financial information. If at all you want to associate your name with projected financial statements, that's the only way you can do it. And it is giving a report where saying that we have examined the business plan prepared by the client. Maybe it is prepared by you. Examined the business plan prepared by the client, and there is nothing which has come to our notice makes us believe that this will not be, this is too unrealistic. Exact wording I'm not able to recall. So projected financial statements and provisional financial statement we should not sign. That is where I talked, that is talking in the context of Murali Krishna's question on how we would deal with the situation. But if you're doing an audit of a tax audit of a non-corporate entity where Form 3CB is issued, then we have to comply with standards. Otherwise, SAE 3400, SRS 4410. Hi, sir.
Mr.
Can we
Jar, Mr.
sign
Jar,
on?
hello, Mr. Jar.
Yeah.
Just one issue. Recently, on 8th December, this NEFRA chief has stated that now what we are following is an inferior standards. Have you seen the paper, business standard?
Yes. I did mention that, sir. I did mention the
Yeah,
initial.
actually, he has used that word. 2 times he mentioned in that speech also that what we are following presently now are inferior standards. So he to become a Viksit Bharat, he wants to have the more global standards, which is at par with global
superior
standards.
standards.
So that is the thing is going on, and he has suddenly amended SA 600, and wherein he is asking us to get the to audit the accounts of the components of the respective group companies. So all these new developments have come up. So what the
Very, very
institute is taking
disturbing.
steps for this?
Institute has taken up this matter. Our president, Ranjit Kumar Agarwalji, he convened a meeting of the past presidents. We have aired our concerns to the ministry, saying that they're exceeding their mandate and in fact, making what we call intimidating the institute and its process by saying that inferior standards, etc. Yeah, what you said is NFR is going to berserk against our profession. Yes, that's what
Yeah.
I said. My son's teacher
Actually,
also.
all the 3 members have rejected to vote that meeting also. 11th and 12th December, one meeting has happened, and 25th November, one meeting has happened. So like that, NAFRA is issuing one by one standards.
But sir,
Which are applicable from 1st April 2026. So,
but the thinking seems to be different. There's something brewing in the ministry where we are getting sidelined and they want to issue that, as I mentioned. See, So wherever we have been issuing standards, international practices, they're not
Yeah.
inferior. SA 600, there's always been a lot of debate where saying that, okay, the principal auditor is
Right.
made responsible for the work of the compliant auditor. So for
Yes.
example, for a company, private limited company in Vijayawada, where you are the auditor, and it is a subsidiary of a company in Hyderabad or Mumbai, where he is a principal auditor and you are the compliant auditor. So the thinking is that the SMP, small and medium practitioners, you and I included, do not have the practice of complying with standards. And
Yes.
when this becomes part of the consolidated financial statements, which is ultimately being going to the shareholders, etc., consolidated financial statements, the same quality that a multinational firm would bring in should reflect in the work of the compliant auditor also. So they are given access to the working paper. They are made responsible for the work of the compliant auditor. That is that you are doing as an audit. So therefore, they should, for that, they should have access to the working papers, the processes of the competent auditor. This is being debated, but I think they are going ahead with that.
Yeah,
600, they will
even
enforce.
it is not possible to obtain other country audit reports, working papers. How can you get other countries' working papers? Their law has to permit. Even our law does not permit us to see other auditors' working papers. How can we get
But if
working
there is
papers
if
from
there is a law or
other
regulation,
countries? This is
if
the
there is a
issue.
law of regulation, if there's a CBI inquiry, we
Yeah.
have to divulge the information. Otherwise, it is confidential. But today, the regulator comes up and saying that SS 600 gives total authority for the principal auditor to access the compliant auditor's working papers. One will have to concede. You and I cannot make the law. Now look at what Subramanian sir has written. Why did ICA let the matter handled by the government? We all know that they are not experts in auditing and accounting. Yes, Ji, but we are the institute is maybe of an act of the parliament. We have to be subservient to the government, but the government is thinking is different, and therefore we are being sidelined, we are being subdued, we are being intimidated. Very unfortunately.
Yes. Okay. Okay.
I share the concern more than that because I've been part of the as a regional chairman. I've interacted a lot with the and also there's some ministry interaction which has happened as a committee member of the corporate law committee member, and they seem to be doing a lot of disfavor. They want to take charge. NAFRA wants to super overpower the institute, and that's the way it is. It's very paining.
Very yes.
Particularly framing the standards. And hi, sir, can we sign the provisional sales report of a government tender project to that particular tendering authority? Provisional, we cannot do. Sales report is the actual sales report, we can, because it is coming under certification kind of thing. There again, the case of certification, what happens today is the client's accountant would call up and say, sir, are you free? We want 3 years turnover certificate. Or we want to give a statement of investment in machinery for MSME registration. And on that, we instruct the assistant. Do insist on an email, at least a WhatsApp message, a request. And our report or certificate, there's a format given. Certificate is issued in response to your etc. Your request by email dated so on. Based on that only we should issue and collect all the evidence that is required. This provisional sales report and please, for God's sake, do not sign. My phone number and email ID, I think, is still visible on the a part of the presentation.
So once we conclude this, we will share your entire PPT and also the audit trail documents which you shared with me, sir. I'll share both the documents.
I will do that. Oh, I've already shared the audit trail matter now with you during the presentation. I'll do the audit, send the audit kit also, and also the PPT with the Vijayawada branch.
Sure, sir. I'll share.
No IPR, no except that some homework has been done, and my teaching background helps me to develop on this, and I have a team also. That's how we move forward.
Yeah.
So wish you all the very best. It's back to the organizers and in absentia as chairman. Jayant, you did a great job coordinating. Thank you for the nice introduction and staying through.
It's very fortunate.
Very happy. Still, we have 66 members online with us.
Yeah.
I was waiting to hit 100, not for me, to congratulate you for the good groundwork you have done. Topic is very important. I think before December you have to do code of ethics. I think before December you have to do code of ethics also.
Yeah.
We already done it, sir.
Done it all.
we have to do once again also.
Great.
Yeah,
great.
we need to do once again.
All the best to all of you. God bless Vijayawada branch, its members, and that is me signing off technically, and I'll wait for the vote of thanks.
Thank you very much, sir. Thank you for
Jayant, give
coming
me a word,
virtually.
man. Jomon sir, you are really taken a tour of auditing standards, as in when we visited one place, we have to visit all the important places. Like that,
Yes.
you have toured the total standards and auditing. Really excellent, sir. Thank you very much for the great effort that you have done it. Really would like to see you. Could not able to offer anything because of online thing and all these things. So whenever you come over here, definitely you'll be the guest of ours. Thank you, sir. And over
Thank
to
you
Jay.
so much. Honored.
Thank you. Thank you very much, sir. Definitely, we would like to see you physically next time.
My
We
pleasure.
are ready to
Sure.
host you. Definitely, your sharing of knowledge will be helpful for our members. Thank you. Thank you once again from Vijayawada branch. Signing off
And
for today.
special
Good night.
thanks to the members who have complimented, given their compliments and good wishes over in the chat box.
Yeah.
And have a great have a good night's sleep and travel safe, home safe.
Sure, sir. Thank you.
I leave the meeting now.
Yeah, I'm ending the meeting, sir. Thank you.